At Novogradac Conferences, there's always something new to learn. Our expert panelists provide the latest insights on the industry's hottest topics. Here's an inside look at the Investors Outlook panel at the Novogradac New Markets Tax Credit Conference in San Diego.
Maybe a year ago, there was a lot of concern about deals that were not going to get done. And I think there were some that may not have pursued new markets. But most of them, I think, were able to adjust, whether it's smaller allocation amounts, various different ways to not have that issue. But now I think the industry knows what's going on, knows what's needed. The CDEs understand it. The consultants understand it. They know what everyone is going to require. So I think that the industry has adjusted, and I don't see that affecting deals anymore.
You do still see a big focus on federally qualified healthcare industries and grocery stores and some schools, although I think some of those are less prominent now, or they're at least receiving less attention generally than your typical manufacturing type projects. And then I think another thing that a lot of CDEs are really trying to do is utilize the program to serve smaller businesses or smaller industries.
Part of having a reduced corporate tax rate, assuming they still maintain tax credits if they're really needed, is trying to evaluate, will institutions have a sufficient tax liability to still offset? And will we be allocating what amount of capital that we wanted to offset to a particular product like new markets versus light tech versus historic, if yields, in certain tax credit products would be superior? That's part of, I think, the calculus that all of us are hoping for.
Get questions like these and more answered at our June New Markets Tax Credit Conference in Washington, D.C. Visit youtube.com/Novogradac CPAs for more conference clips and tax credit how-tos.